Oh, hello everyone, and welcome to this morning's session, which we've actually called looking at the markets with VPA and the quantum indicators across the markets. But we do have a sort of structure, and basically we are going to start with Forex. Then we're going to look at some indices and commodities, and we've got a little bit of a stock section at the end. And but even if you just are interested in the Forex element of it. All the markets are interrelated, connected, different markets sort of correlate at different times. So even if you are just more focused on Forex, I think you'll find something of interest in all the sections, particularly as the VPA methodology is applicable to all of them. But before we start, as usual, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Now, for some reason, what's happening here? Oh, here we are. Just go on to the next one. Right. I mentioned volume price analysis. The methodology is explained, or the concepts around the methodology, at the books that you can find on Amazon. This is the one that refers to the Forex market in particular, but there is commonality. You know, there is a basic methodology, and it is, as I said, it's applicable to really whatever you trade. You need price action, volume, support and resistance. We use candles and candle patterns, but if you're not aware of the methodology and you want to know where to start, well, the best place to start is literally just invest $5 in one of the digital the ebooks that are up there. And I think Amazon are going to do a special promo on them for July, so you don't even have to pay a $4.99, not for all of them, but for the VPA one. And we've boxed them up as well. This is the little box set particularly for Forex, where it is the VPA and the other books that are with the worked examples, the 3D approach, which is this cross-market analysis, if you like, what we call related market analysis, and what to look for. That's in there as well. And what's it? 1, 2, 3, 4. And what have we got? And I think it's got the complete, yes, it has. It's got the complete guide to volume price analysis as well, which is the core book, if you like. So you get 4 books, and I think it's less than $10. So a jolly good value, even if I say so myself. Right, VPA, David's laughing in the background. VPA, I know those of you who come along regularly have seen this, but it's the best way we could describe the methodology, that it is the foundation for your technical analysis, and it's the price action, the volume. As I said, we use candles, candle patterns, and you'll see these on the charts that we've got for you today, and a support and resistance. I know I bang on about this every time, but I really cannot stress enough about support and resistance. We have our own way of determining those key support and resistance levels that are important to the market, are important to other traders out there. And we use price-based, and we also use volume-based as well. But there are other ways that traders, mark them out on their chart. One of them, you can use moving averages, you can use Fibonacci. What else is there? Elliott wave. It really doesn't matter. The key thing is you have some idea of what happens at those levels. Is price going to reverse, or is it just going to pause and go on and carry on in its original direction? And this is where the first 2 elements of VPA will help you, which is the price action and the volume. But the volume is the key to this, because a price can get to a key level that's, everybody has been talking about in the media and what have you. But and they're expecting a continuation, for example. But if the volume isn't there to support that continuation, well, it's either not going to do anything, or it's going to reverse. And that is why volume is so important. I just reading a book recently written by someone who's been in the industry within the industry. I don't like to use this. I don't particularly like the differentiation now that is given between you and I, who are on outside of the industry, not being professional traders, because that distinction doesn't really exist anymore, because we are all party, more or less, to, you know, the information is out there now. In some ways, we are overloaded with information. And if you treat this as a business and you take it seriously, then you are a professional. Because somebody works for a bank or a hedge fund or a trading desk, that person, well, for a start, what are their advantages over you? Well, they've got more money, but it's not their money, it's somebody else's money. And to be honest, if they screw up, so what? You know, they either move on somewhere else or they leave. When it's your money, you have a very professional attitude to that money. So what is the difference between you sitting in front of your screen and that person sitting in front of a banker's screens, perhaps working for somewhere else? So I do take exception to anybody who makes the comment, oh, you know, pro traders. We are all professional traders, because this is your money that's at stake, and you take a professional approach and attitude. And please don't ever think that you are any worse, or you don't know, as you know, you're not capable of working in this industry because somehow you're not working on, let's say, on the inside. I accept we are on the outside, but there is, having read lots of books written by so-called insiders and having met people who have worked on the inside, I can assure you, you know, there is very, very little difference. The only difference is the size of your account. Now, sorry, I will get off my soapbox now. I expect David may take up the theme later on, because he has even stronger views than I have. Right, there's your foundation. You can then overlay whatever indicators you want, the appropriate indicators. It's overarched with time. That's the time frame that you trade, and also multiple time frames. Multiple time frames are so important, particularly when it comes to these all important support and resistance levels, and I will explain a little bit more detail when we look at the charts. Right, for Forex, we have some I mentioned indicators, we have some very particular ones. I know we've got some of our quantum users here. These are the ones are current Forex specific, where we like to see where the flows are going into individual currencies, individual currency pairs. We measure the strength of those flows with the currency array, and with the heat map, we look at things in multiple time frames. And I've said it many times before, and I will say it again, this business of Forex, it's about levels, those all important support and resistance levels, and flow. Flow is the volume. Where is the money going to? And once you recognize that and you put it together with the price action, you will never be surprised again at, you know, why you're bounced out of a trade or why something hasn't worked out the way that it has. Right. Talking about money, which is why I got my little soapbox earlier on, and funding, what we've actually put together to help traders like yourselves. When we started, you know, no one has access to huge sums of money generally when you start in this business. So it's one of the reasons why we put together the funded program. It's open to anyone who takes the Forex program. It's not your money, it's our money, and it allows you to trade your way up to an account of $2 million with no risk. And again, David can explain that a little bit more detail. And this is the details of the actual program that we have put together. And you can see it's five modules. Obviously, the technical analysis, which is the very, very deep dive into VPA, and also VPA is based on the principles of Richard Wyckoff, and you can find a lot of Wyckoff's original work on the internet, and it's really, really worth looking at. And we pay all due homage to Richard Wyckoff, because without Richard Wyckoff we wouldn't have volume price analysis. But what we'd like to think is what we've done is we've actually built on that, built on those concepts, and that is what the technical analysis module goes into more detail for the program. We have the fundamental analysis, going back to this 3D approach, and what we call the relational analysis. It's the cross-market analysis that we have to look at to give us an idea of where those flows are going and why they are going in that particular direction. And this is where the other markets will help to give you a clue. Psychology, probably the most important module, and the mechanics of trading, risk management, and we'll talk about a little bit more about risk management, particularly when you apply it to the structure of the chart that you are looking to trade. And again, I will explain that in more detail as we go along. Right, that's what. Just move that out of there very quickly. Let's have a quick catch up of where we are at the moment. One of the reasons why we've moved to this particular time is for a number of reasons. First of all, the prime one is although we're up much earlier on and looking at the markets and seeing what's happened, particularly what's been going on in Asia, I spend a couple of hours every morning just going through the stuff that comes into my inbox. I do get a lot of information, so I can kind of build a picture of what the commentariat has been focused on. But one of the second reason, first of all, that takes time. So, we have to devote to that. But the other main reason is Dave and I, to be perfectly honest, with the London Open, we don't trade we don't really trade Eurex. It's as I said, that's the time that I do all my catch up and what have you. So come the London Open, fine. It's just annoys. It's getting really annoying, to be honest. So we've kind of moved it on a bit, and also coming up now at 11 between 12, we're starting to get the very early, sort of very, very early traders over in New York. And in fact, in talking about liquidity, we've got Europe, we've got London, and gradually we'll have New York coming on board. We have a little bit of a pause in the kind of crossover, and then we come to the really deep liquidity certainly once Wall Street opens as well. But the Forex one tends to sort of kick off about 1 o'clock, David? About 1 o'clock, yes, in a couple of hours, and but traders will already be starting, and what it is with this period is what we want to have a look at is, well, what's been happening now up until now? What is the news that's been coming out? What is the news that is going to come out certainly around 1:30 for the US markets? And is there going to be any follow through from what we're seeing at the moment? So what I have here is I have the hourly time frames up. I have the hourly time frames for the matrix and the CSI, and I've actually got the daily for the Dixie to tell me what the US dollar is. And when I said earlier about flows, this is even before going to have a look at a chart, going to have a look at what's been happening overnight on the news feeds. The first thing that really catches my eye is, well, first of all, it's really good to see that we have some divergence. We've had some strong flows into currencies, and these are the lines that have been moving in one direction. What is really awful is when you get something when they're here in the middle. Now, admittedly, that was late in the session, which is probably what you expect, but you can get this sort of bunching in the middle at peak trading time, and a peak trading time is when you have the deepest liquidity, and you really don't want to see that, because you think, oh my goodness, you're going to have to be patient, not get frustrated because there isn't divergence. And we also know from the numbers that appear on the matrix, we developed this indicator to basically rank, to take this data and tell us which of the pairs are moving most strongly, either strongly bought or strongly sold, or if they're stuck in the middle and they're basically not doing anything, they're just either in congestion, or maybe it's the wrong time zone for these particular currency pairs. And what we don't want to see is these low numbers. Now, they have come off a bit since this morning. I know that from experience and having looked at this indicator, there is an upgrade to the indicator. It's available on TradingView, which basically tells you whether minus 39.62, is it average, is it above average, or is it, you know, quite low? And that also tells you, yeah, there has been movement, but it hasn't really gone very far, because these lines will appear as they appear, but they don't sort of rank, if you like, the strength of the move, whereas the matrix does, basically. Now, the first thing that catches my eye, and it tells me that the market is kind of working how it's supposed to be, because the last few weeks it hasn't. I'm seeing a dollar buying, I am seeing a yen buying, I am seeing Swiss franc buying, I am seeing selling of the Aussie, and I'm seeing selling of the New Zealand dollar. And that kind of, you know, says, right, now I may not like what it tells me in terms of sentiment, because that tells me that markets are kind of, they're not really in a strongly risk-off mood, because if they were, the Aussie would be bought, the New Zealand would be bought, and probably the Canadian as well, and the yen and the Swiss franc would be sold. And there is and I look at that and I think, okay, that's what the price action is telling me at the moment. There's flows into the yen, flows into the dollar, and flows into the Swiss franc. So market's not really very happy at the moment. So and this is what I said earlier, looking to hi, I'm back. Thank you. Thank you, Ezzy. Right, okay. I think I'm back. Am I back? Can you hear me now? You can hear me. Right, I think David can hear me. Fantastic, thank you. Right, forgot what I was saying there. Never mind. Okie dokie. Right. Right, so what am I saying? Yes, looking at the flows into these individual currencies. So that's on an overall macro level, if you like. What I also like is, because we've had some divergence, it tells me that obviously we've had some, you know, clearly some nice moves over on the matrix. We've seen there's the euro New Zealand, the pound New Zealand, the New Zealand dollar, because we can see this overextension that we have here. That can carry on. The way we use the CSI, these numbers that we've put here, 80 and 20, they're just a kind of reference point. I mean, we could have called that, I think, this, you know, 65 and 35, as it were. We've just used 80 and 20. And it's, you know, but this can carry on higher and it can stay there. So when you're looking to use it for a potential reversal trade, let's look at the yen that we had here. As you can see, it moved higher. It did cross back over the line, you know, so obviously there may have been a nice trade in this little bit of price action here, but then it went back up again, and down it has come again. So you do get these oscillations even at these extremes. Ideally, what we do want to see is, we want to see them, you know, coming down a fair way. Where are we at the moment? Let's have a look at the pound here. Here we are. We had the pound trying to rise, came back, then it rose, and then you get a sort of fair wind behind it, as it were. Now, there could be all sorts of reasons why you get the oscillations at the extreme. It could be the session is quietening down and there's a crossover session. Sentiment may have shifted for whatever reason, but it is something to be aware of. And don't forget, this is the hourly chart. This is really to get a view of what is happening or been happening out there in the market. But it's good to see, you know, the more overextended it is, the more it stays overextended. When it does snap back, you can be pretty certain that it, you know, it's a bit like an elastic band. You pull and pull and pull, and then pow, you let it go, and off it goes. Now, you know, then we all like to have a reason as to why this is, you know, why suddenly the market is it's getting a little bit, you know, a little bit unsteady. I know we've been saying this for some time, but you know, things are at all-time high. There's stuff going on in the background, and I caught it in investing.com on the front of the site, and that is because it's suddenly becoming a little bit nervous about the virus again, and in fact, it was quite interesting yesterday on the pound Aussie, because if you were following your news feeds, this is an example of sentiment, if you like, towards two individual currencies based on something that is going on outside the financial sphere, and this is the difference between what is going on in Australia. Those to do with the virus, bits of Australia have gone back into lockdown. The whole virus narrative is Australia took a particular approach in that it was total isolation, but their vaccine program is not as well progressed as it is certainly here in the UK and in other countries. And with these little lockdowns coming in now, local lockdowns, market has taken that as, sell the Aussie, as it were. Whereas here in the UK, well, after the shenanigans with the previous health minister, we've got a new health minister. There seems to be a different message that's coming through. Our lockdown is supposed to be ending on, we've been told, it's definitely happening in July. And this was expressed in the pound Aussie, and this is up on my Facebook page. Pound Aussie on the day, we had some really strong moves, strong move lower, and then suddenly we had this change of narrative to do with the virus, to do with these two currencies, and up it went yesterday, and I think it's carried on this morning as well. Just quickly looking around the markets, we've got the Dow futures, they're up very slightly. The S&P futures are not. The VIX is at 15, which is, not quite total complacency, but it's a good value to have. The Nasdaq's not looking quite so perky this morning, but, it keeps pushing out into all-time highs. And when markets are in the, all-time highs, markets get, traders and investors they worry. It's called the wall. It's not called the wall of worry for nothing, as it were. And it's not really going to take very much to kind of shift the sentiment. Now, what's interesting on the European side is the DAX is absolutely, going gangbusters, and even the FTSE has been moving higher, and it's partly to do with the fundamental news that's coming out of places like Europe and the UK as well. The traders and investors always looking ahead. They think, okay, well, this is what it is at the moment, but is there anything in the data that tells us that maybe things are going to get better? And the last index we look at is actually the US 2000, which is the small caps, and even that, late yesterday, there was a lot of buying coming in. It's a bit sort of not doing anything at the moment. We're just looking at it for sentiment. And finally, a final look at the economic data. Now, I've mentioned it before, try and have, I can say multiple calendars, but certainly more than one. If you look at Forex Factory and see what is happening today, it doesn't seem as though there's very much going on. I mean, there's Lagarde is speaking, there's yet another Fed member speaking, but it doesn't really look terribly, comprehensive. I use Financial Juice as well, because it combines with a really nice news feed. But the thing is with Financial Juice is once the news has happened, it's that's it. It just rolls through. So my third calendar is this one, which is from Trading Economics, and you can filter this. So you can take out, I don't quite know what TR is there. I thought I'd filtered that out. You don't have to have all the individual You don't have to have all the individual European countries. I just do, because getting back to this idea of perhaps looking forward with financial news is just to see those items of news that the market is focused on at the moment. One of them is obviously inflation. We know that it's the main topic of conversation at the Fed and in the, as I said, the commentariat. But we're also having a look at sentiment. Now, it's taking a bit of a knock today because of this worry about the virus. But what is the actual data telling you? You know, our consumers, you know, they're ignoring that, they're actually spending and what have you. And this is where you would find this. And in the States also, you probably picked up about house prices, and you know, traders, they're always looking for, you know, things are going fine at the moment, but you know, what could knock it off, you know, of course, as it were. And of course it'll be in the price action, but you need also the data there, the financial data, these releases, to look at them and just be aware of them. Some of them are obviously going to cause more of a reaction immediately. And the other thing, of course, is, for example, Lagarde is speaking today at 2:40. Now, on this calendar, where you have them in bold text, the trading economics considers it market moving, as it were. It doesn't happen in Forex Factory. Sometimes it happens in financial juice. You know, Fed speakers at the moment. You know, this release here, I've mentioned about house prices. Are we going to see a situation in the States similar to we saw in 2008, because we've had such low interest rates, people taking on more debt? We're going to, and they really don't want another housing market bubble, you know, bursting, as it were, with all the problems that caused the last time, and you know, housing in this country as well. So it's, as I said, and stuff you kind of absorb, as it were, as you become, you know, the longer you are trading. And also you need to understand, I like British pound and my British pound pair, so I'm going to be much more keenly aware. This data is of, you know, particular interest to me because I'm more focused on the British pound. If you're more focused on the euro or any euro pair, then you really need to get to grips with it. And also gradually, as you become more experienced, what data moves the pair that you are interested, you know, looking back, as it were. It's not back testing, it's simply being aware of, you know, when this particular release came out, and you know, what was the reaction in my pair. It's very easy, you just do it by observation. Oh, that, you know, it really shifted it at that time. Why did it shift it? Was it, there was a technical reason? What was the technical setup on the chart? And also, what was the market thinking at, you know, the media? Was it actually focused on the on that data set? The data set that the media focused on at the moment is very much sentiment indicators, and obviously anything to do with inflation. Now, actually getting look at my charts. As I said, I've been on as always on pound. The interesting thing about pound is that it's kind of stuck here in the middle. There has been some buying, but it's a bit sluggish, the buying. And what's interesting, certainly on the pound New Zealand, this cross pair is, while the New Zealand has been falling and falling quite strongly with the euro, we can see the euro moving strongly higher and the New Zealand. So we've got some nice strong divergence there. What can happen is, if the euro then suddenly decides to roll over and the New Zealand carries on falling, that strong selling in the New Zealand will switch. It will stop in the euro New Zealand, and it may be picked up by the pound New Zealand, which is why I'm actually keeping an eye on that one. I've also been had the cable up as well. The problem with cable is that the dollar has been moving higher, and so has the pound. So as we can see here, we've got we had a little bit of we had a break at the following the London Open, but it's essentially moving sideways. That's what the CSI is already telling me. So I've missed that. I'm going to have to be patient, either for the dollar to roll over or the pound, so I get this divergence. But just to pick up on the pound New Zealand, there we are. Now there has been a move in the pound New Zealand. in fact, quite a nice move this morning. It's now come up to a key level, which is the R4 on these on my faster time frames. I've got the congestion phase that I've got here. The break was actually away from the volume point of control. It was actually at the London Open. That's 10 o'clock. That was 8 o'clock. Really a nice move higher. It's not it's a bit of a messy trend. I accept that. There's lots of wicks to the candles, but it got through the R3 levels and flow again, plenty of sort of volume underneath the candles, but it's hit the S4 and it's also hit the volume resistance that we have here. The volume resistance comes off these levels and it's derived from the volume point of control. Now, the best way to see this in all its geometric glory, as it were, is actually from the is actually on the Renko chart, because all we're looking at here is the price action and the geometry of price action. And this is I admit this was much too early. It actually started overnight, but you know, that's been and gone, went into a congestion, and then this is the London Open. But this is what it's reflecting, although with the indicators that we've developed, that's the trend dot and the trend monitor, not only do they help you with your potential entries, but it also, the most important of all, it helps to keep you in this trade. And what's interesting now is it's gone into the congestion phase. Is it going to have a rollover? Remember what I said on the CSI, certainly on the hourly CSI, the pound looks as though it's got more upside, and you know, this rotation, we've had this really nice move in Euro New Zealand. So if we compare with what's been happening in Euro New Zealand, there we are. And do you see, you have an entirely different look and feel, because you've had this strong if we had this strong divergence, and much more buying of the euro, stronger buying than we've had in the pound. But as I said, it could switch, particularly if the New Zealand carries on being sold, and it will carry on being sold because it's down to sentiment.
Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got two versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView, because as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine. We do that for you. Absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out. You never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView, because as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.